Hi everyone. Most students learn Excel formulas only within a single worksheet. But inside corporates, especially in FP&A and corporate finance and other consolidation environments, financial models often become significantly larger and more complex entities, different business units, or even different segments altogether. And all of those segments and entities and departments could be well interconnected inside one financial model. Now imagine manually linking hundreds or even thousands of cells across different worksheets, which can quickly become messy and difficult to maintain and also become a huge nightmare. Now this is where exactly 3D Excel formulas become extremely powerful. In this video, I'll mainly cover four main things. First, what 3D Excel formulas actually are. Second, how they are used in corporate finance and FP&A models. Third, how FP&A teams use these 3D Excel formulas for consolidation and reporting. And lastly, we'll also look at other critical functions such as SUMIFS inside a sum function and VSTACK and other modern functions which are significantly improving the way FP&A workflows. Hi everyone, I hope all of you are doing well. My name is Nitesh and I'm an MBA from Udaipur 2013 to 15 batch and a CMA as well. I have 11 plus years of professional experience in financial planning and analysis and investments across different companies. I was also associated with a US based private equity fund as an investment analyst. Currently I'm leading the FP&A function at a global conglomerate. Please feel free to reach out to me on any of my videos in case you have any questions or in case you want me to do a video on any specific topic. Now let's get into our current video. Great. Now before we begin, let me just give a small disclaimer. This is a totally fictitious company and I have created this extract so that I can demonstrate a certain practical concept to you. And these numbers that you are seeing in front of yourself, either the company or anything, whatever you're seeing, nothing is real, everything is fictitious. It's just I'm trying to demonstrate an academic concept to all of you. Now let's move on to our first part of the video. What are 3D Excel formulas? So understand it this way, that in a traditional formula, it's two dimensions. When I say two dimension, I mean row and a column. And also the traditional formula is limited to a single worksheet structure. And if you have to scale it across to multiple different facets or probably entities or segments or departments, it might become a little bit complex in that case. That's where 3D Excel formulas kick in. So when I say 3D, it simply means that a third dimension is added to the Excel formulas. The third dimension is nothing but the worksheet itself. So there is rows, there is columns, and then there is the third dimension, which is the worksheet. Now the typical formulas, if you see, are sum, count, average, etc. These are the basic 3D Excel formulas, but their application is heavily advanced, though it seems that it's a very small function, sum, count and average, but इनका जो application है वो बहुत ही ज़्यादा ultra advanced होता है. Let me show it to you in the next 5 minutes कि कैसे इनका application बहुत ही advanced है. And in 3D formulas, what we do is कि we refer to the data points across multiple different worksheets and tabs, etc. This is very helpful when you are rolling up information for different departments or different entities or different segments altogether. Imagine a segment where there is an organic segment and there is an inorganic segment, and each of these segments are built up with different entities. You can also imagine another scenario where a company is into different regions, Asia, North America, etc. And each region has contribution from different countries, which all of them rolls up into the regions. So that way, if you imagine for this formula, it will be very easier to understand and comprehend. The 3D Excel formulas can also support scenario-wise modeling as well. Though scenario-wise modeling using 3D Excel formulas is out of the scope of this video, I can later, if there is any special request, and then I can later specifically put a video on scenario-wise modeling specifically using 3D Excel formulas. Now let's look at how 3D Excel formulas are created. So we'll go to the Console tab. If we look at this cell specifically, what it says is from 1, which is this worksheet, until 2, which is this worksheet, add everything which appears on P9. So if you see, P is the column, 9 is the row, and the third dimension is the worksheets, which is from 1 to 2. Now anything between this range will get added up because we have used a sum function. Now how to create this? We can see it very quickly. Just do sum and then press tab and then go to the first starting sheet where I want to add. Okay, now I can actually add it from here. I want to add from EQPR until corporate. So I will just select the number which I want to add and then hold down the shift key and then just select the last range of the sheet and then just close the bracket and hit enter. That's all. Now if you see, it is exactly same, the value is exactly same here. Another thing, if I can drag this also, it works exactly same. There you go. So it works this way. Now of course you may say that here I've used 1 to 2. That also we can do. We can just select all of it, hit Ctrl H and then just replace EQPR is to colon corp exclamation and then 1 colon 2 exclamation. That's all done. So it's all four cells are changed. This is the way we create 3D Excel formulas. Okay, you can also use, instead of this, you can also use count. Okay, so that will simply give you what is the count between this to this. Okay, you can use count A to get the non-blank values as well, and that gives you here. This simply means that okay, 1 2 3 4 5 6 are the non-blank cells. Okay, and assuming if I delete something here, the value will change. If I delete it here, that will become 5. So that's how it is used. Let me just hit Ctrl Z. So that's the application for you. Now we can, we have demonstrated an example how to create 3D Excel formulas. Why are 3D Excel formulas used in the financial modeling? There is a segment which keeps on expanding or contracting going forward. And when you're evaluating multiple different scenarios, that segment can either expand further or contract later as well. Now what I mean to say is this: assume when you are finalizing your budgets and let's say you're evaluating a potential scenario wherein you go for acquisition or you go for, let's say, expansion into 3 different geographies in the next 5 years. If that's the plan, so you'll either, your inorganic segment probably will be just the summation of those three segments which you are planning to expand to later on. So that's where it becomes very much helpful, because tomorrow someone can also tell you that hey, we are not going to do three expansions, we might do 5 expansions. So in that case you can just copy that entire sheet and place it within the same range where it is getting consolidated and just change the numbers that are supporting those workings, and the whole thing will get consolidated. We will have we will demonstrate the concept live in just a couple of minutes. Another reason why we use this is because it simplifies the entire consolidation and roll up from across multiple different sheets. Now let me just show you one thing. If you see here, the structure is this way, that the console sheet adds up from entire different 1 to 2. Basically it means that this consolidated entity is the summation of the entire segments that are within this entity, mainly EQPR, log, WHS, PKG, retail and corporate. Ideally, there would have also been an eliminations tab as well, because there would be certain intercompany transactions between these departments that would happen, and which will get eliminated when you consolidate for the holding company. However, just to demonstrate an academic concept, I have not included these here. Okay. Another level of structure is if you go to EQPR, EQPR is further broken down into 3:4, meaning from here to here, which is EQPR Gujarat, EQPR UP and EQPR Maharashtra. So these are three different states that contributes to the sales of, or that contributes to the EQPR segment altogether. Similarly, log, WHS, PKG, all of them can also be different segments which may have further roll-ups as well. You may notice that GEM is not included in any of these. Now imagine if tomorrow something changes or any assumption or business model changes, you can straight away just take the GEM, put it in this range and it will work. So if you see, let's look at where it will create an impact. So if we see GEM has total manpower cost closer to 49 million, okay, 49 lakhs. Now we go back to again here, and we just to check whether the values will change, I want to demonstrate that to you. That's why. So if you see, the total here is 4264, okay, and 4370, 4478, like this. Now all of these values will change the moment we pull GEM in. So I'll just all I have to do is just pick up this sheet and move it into this range. That's it. Now when we go to console, you see these numbers have changed. This is now 4313, which was before 4264 and 4370. The total summation is 22412, and when I pull it back in, 221412 changes to 22671. So that's how consolidation and roll-ups become very easy when we are using 3D Excel modeling. And this is what gives the full flexibility to 3D formulas. Coming back to the point where we were discussing, yeah, it helps standardize the entire financial models. Like if you see, the entire financial statement is standardized across all of these sheets. If you see across all of these sheets, like if you look at net profit appears here at 98 line item, here also it will appear at 98 line item, and here also in log also it will appear at 98 line item. Yes, packaging, even corporate, if you look at it, it will appear at 98 line item. Okay, corporate doesn't have anything related to revenues and direct costs because it's mainly an indirect function, and the function will only have indirect related costs. And same is for even retail as well. So that's what the standardization means. All of your sheets have to be standardized in exact same way. The same rows, same columns, same everything. You can have partial standardization, which is fine. When I say partial standardization, I mean like, okay, until row 100 you have income statement, then let's say another 100 rows you'll have balance sheet, and then another 100 rows you'll have cash flow. So probably until row 300 or row 200, let's say 300, you will have all the financial statements which are standardized across the sheets. Below 300 row, you will have your drivers, projections, schedules, calculations, workings. Now they can be different. That's fine. Before 300 row, use 3D Excel formulas, but beyond row number 300, do not use Excel. Do not use 3D Excel formulas. So that's what standardization means. If you are using 3D Excel formulas, make sure that everything is standardized. Even your console tab has to be standardized. Okay. Now, if you don't keep this standardized, it will still work. Okay. But this only works for console tab. If you don't keep standardized, it will still work, but it will be very difficult to reconcile whenever there is an issue. And it's always a best practice to create checks in such kind of models. If you see, I have created EBITDA breakdown here and have used checks, okay, across this. So this showcase and this check is nothing but wherein I am just checking whether the sum of total of all of this is matching the number that is coming here at the corporate console level. That's what I'm checking. So it's always better to have this kind of check, which brings in more sense of comfort to your team. So, and that's one of the best practices as well. So yes, I have already demonstrated that any new worksheet within the range automatically becomes part of the consolidation, and I've already demonstrated it live with an example. Now let's go to another thing, which is what is SUMIFS inside a sum formula. Now I'm sure most of you might not have heard of this kind of formula, but let me explain this. Okay, what this kind of formula is. Usually, imagine this way: if you are using SUMIFS, you can always give one criteria, right? One condition, right? Basically, if you have to find two conditions, SUMIFS based on two conditions, you will have an option of using SUMIFS plus SUMIFS. So there is a better way to do that. Again, though it is not exactly 3D formula, but I consider this as a 3D formula. Why? Because it traverses through a dynamic array to find out all of those conditions and then sums it up. Now let me give you an example. So one of the examples, let's look at theoretically first. So it's basically a nested aggregation approach, wherein you can either have multiple SUMIFS calculations and combine them inside a sum formula. Okay, and that's what is happening. Outside there will be a sum function, and inside there will be a SUMIFS function, which will have multiple different conditions. Now another thing is, this is very helpful when there are multiple criteria groups. So think of this way: imagine if you have to write SUMIFS apple plus SUMIFS oranges plus SUMIFS guava, right? This is what you can exactly do using SUMIFS. What you will do is that you will use sum outside, inside SUMIFS, and these conditions will follow in one single SUMIFS itself. So this way the entire formula is structured very efficiently, and it's very easier to reconcile. Assume when there are 5-6 conditions, and if you just put 5-6 SUMIFS, it will become nightmare for someone who is reconciling your model. Okay, so that's the reason why we use this SUMIFS inside sum, and it's heavily used in FP&A and corporate finance modeling because it helps you aggregate multiple different categories or entities simultaneously. Even when you are doing some of your data analysis in equity research, etc., you might have some reason to use this as well. When I was covering automobile sector in one of the companies as an equity research analyst, I was covering companies like Daimler and Volkswagen, etc. So at that time we used to heavily use this formula. Why? Because in automotive and automobile segment, there is a lot of data points that you will come across every month. Each company will release their monthly sales figures across for each and every unit or type of unit of automobiles that they sell. There is also monthly production data that is launched by or released by each and every original equipment manufacturer and even the automotive supplier as well. So that's where sum inside SUMIFS was very much helpful. So let's look at how we can create this. So if you see here, let's look at with a very simple example, and then I can show you a little difficult example as well. So if you see here, what I have done is this. I have said that look at column K, okay, sum up column K, where you have column G is equal to from B to L range. Okay, now G will be nothing but GL codes. Okay, G is the column where GL codes are stored, and sum up all of those GL codes which are in this range. Okay, B to L, and then also for D column sum up what is equal to this. D column is nothing but the segments column. So let me just show it to you. So it's the K, G and D columns that are of interest. So if you see here, column K is the January month, D is the segment, and G is the child code. Child code and GL code are the one and the same thing. So that's what the formula is doing. Now imagine if you had to, let's say here, fuel energy expense, where you have multiple different GLs. These are all the list of GLs, and any GLs that you copy will get added into this. So for instance, like if I say let's add this GL here, so the moment I add this, you will see that the values will increase. So that's the beauty of this function. I've given a full-fledged range which is adaptable, and I can keep on increasing this range in case any new GLs are created by the accounting and reporting team in future. So that's how it is getting all of the values. You can also use another way wherein you don't give this range, but what you can do is you can put these values inside curly brackets open and quotes, which is what I have shown here, like this. If you put it like this, it will still, formula will still work. But as a best practice, it's always good to put your assumptions from where each and every formulas are being driven. Now let's move on to the two applications of 3D Excel formulas. Now, as I have pointed earlier, 3D Excel formulas are heavily used in FP&A field and corporate finance field as well. And if I give you an example in terms of budgeting, when you have multiple entities, at that time you will use 3D Excel formulas to roll up the entire departments and then consolidate into your final consolidated company. So if you look at this console, this is summation from 1 to 2. So all of these departments are getting consolidated here, or rather I would say all of these entities are getting consolidated into console. And if you look at any of this entity, let's say this entity, which is EQPR, this further has breakdown from EQPR Gujarat to EQPR Maharashtra. So that's how corporate finance models and FP&A models are built in reality, wherein each and every entity has further layers of different departments or different segments, and it goes on until the lowest level of department or division or a profit center or cost center is realized. So that's how models are built in real scenarios. Again, another example if you can think of is this, that if you look at HQ segment, which might have multiple different departments like procurement, IT, finance, HR, marketing, etc. If you have to look at HQ console, then again this is one of the best strategies and one of the best ways to have your HQ sheet wherein you are consolidating all of those departments values, and you will have the breakup of HQ, or you will have the consolidated HQ. Pointed out earlier, during consolidation you will have eliminations tab, and then the eliminations tab is aggregated along with the other entities to arrive at the consolidated figures. But since this is just an academic example that I wanted to demonstrate, so I have not considered eliminations in this consolidation. Now I've listed out certain fields based on my experience where 3D Excel formulas are used. So FP&A and group reporting, it's very high. Very highly you will use these 3D formulas. Almost in all of the companies that I have been, we have been using this 3D Excel formulas heavily. And if you look at corporate finance and strategic finance, the frequency of usage is high, but again can also be medium, depends upon from firm to firm. If you look at private equity portfolio monitoring, you can still have medium to high. When I was in the PE fund at that time, we have used it, but again it was not very heavily being used. You can say it was medium level of usage. And when we look at business finance or treasury planning, again it's same medium level of usage. When it comes to investment banking and equity research, rarely you will use these functions. But still, it doesn't hurt. It's good to know always, because you may even in equity research, you may even try to analyze a diversified company which may have different segments or different entities. So at least the historical levels you can build it up that way, which may push your model towards more standardized approach. Now let's go to another section, must do's and must knows while using these 3D Excel formulas. The most important thing is the consistent sheet structure. Like I showed it to you before, every sheet has to have same rows, same logic and same account flow. If that doesn't happen, your model will not fully be right. And there will be issues, and it will be nightmare to rectify those issues during reconciliation. Yes, consistent sheet structure is very, very important. Avoid hard coding. It's always better assumptions in a central place. One single sheet for the assumptions, where you have assumptions for each and every entity and each and every department within that entity. That way you are presenting it better. And since all of the assumptions will be centralized, so reconciliation at a later stage would not be an issue, and your model will have less probability to fall apart in case when you are using hard-coded values. And use mapping tables. Now when I say mapping tables, I basically mean that there should be a separate sheet as mapping, where you have dynamic arrays and dynamic ranges which can be used at different places in the model. Assuming, just an example for you, assuming that you are creating a scenario logic, right? So in that case, you have a mapping sheet where you have scenario list, bear, base and bull, and tag it as a dynamic array range, so that whenever you expand to a new scenario below bull or below the third scenario, it automatically flows into the entire model. So that's again one of the best practices. Now you can also practice the best architecture, wherein I have already explained this concept, to have that you can also have partial standardization. Let's say I gave the example until 300 rows. So you can have until a certain set of rows, everything across the model is standardized. Every entity sheet and every department sheet is exactly same until a certain set of rows. Beyond that row, every entity and every department will have their own different calculations. Now, color coding discipline. Always try to color code in a standard way, because what I have seen is that, of course, analysis matters a lot, but trust me, presentation is the first thing that anyone will look at. If you are presenting a model, the first thing that the management will look at is how is it looking. Agreed that in the next 10 minutes, 15 minutes, when you explain your returns, when you explain your projections, etc., people will understand that, wow, it's an amazing model. But the first impression that anyone will get of your model is the presentation, the formatting that you have done. So always stick to standard guidelines and make sure that your formulas and everything is well presented and the entire model is well formatted. Good impression. Now, for instance, if you just look at this sheet, it's very well structured. Everything is there. If you look at entire annual financials are well structured. Anyone can open this and look at the monthly projections. If you open this again, so everything is well structured and presented in a well-mannered way. So that's what financial modeling is, wherein you present your analysis, your walkthrough in a visually appealing and a well-presented manner. I mean, I can remove all of this coloring, coding, etc., where I am giving emphasis to gross margin, gross profit, EBITDA before SSC. But then again, it will just look like a raw dump. I mean, there has to be some difference between the data dump that we get from any of the systems versus when an analyst is creating a model, right? So that's how you present financial models. Now, avoid circular references. Very, very important. Do not keep circular references in 3D Excel formulas, because otherwise very high chances that the files will crash. And again, use dynamic range. Point is exactly similar to the mapping table. And use filter, VSTACK or any other dynamic array function to create dynamic ranges. Now we are at the last of our section. I want to explain VSTACK function. Why? Because this is very less known to general public, but this is one of the most powerful formulas that I've seen is important for FP&A and reporting and corporate finance, because it helps you in reconciliation. Now let's look at how useful it is. So if you remember, I showed you EBITDA breakdown, right? This. Now this breakdown, you can do this, that you can is equal to EQPR P67 and then again here I can put is equal to log P67, then again I can put is equal to WHS P67, so on. It will still be fine, it will still add up. But the thing is, the moment you put gem or anything else in between, the list will not expand. So that's the issue. Now what will happen is, the moment I put gem inside this, there will be a spill error. So if you see, I have put gem inside this, and let's go to console. See, there is a spill error. So this spill error is nothing but it says that it's not spilling downwards. So all you have to do is just add a row. That's all. The moment I added a row, everything spilled over. Now of course, here you need to put gem. That's the only thing left. That's it. So this is how useful it is when you are talking about VSTACK function. Now let's push this backwards again. Okay, and let me just remove this line, or let me just undo, better that way. Yeah, okay. So VSTACK does the entire breakdown of a certain number, how it's made. Okay, so if you look at this, this is basically the breakdown of EBITDA. So 446.2 is nothing but this. So that is what we are doing here. We have just linked from EQPR until Corp P67, and then it's a dynamic range. If I delete this, everything goes away. So it's not that the remaining numbers will come in. Okay, so it's a dynamic list which can expand and contract. Now I can push corporate outside, okay, but it will not work. Why? Because our formula is little different. What we have to do is here, that is because right now it is adding up two sheet also in between. That's the issue. So what I have to do is that I have to just change this formula. Rather than EQPR to Corp, what I have to do is that I have to just add EQPR colon until, let's say, retail. That's all, and replace. Done. So that's how it contracts. Okay, but again, you can still, there is a workaround for this. I just wanted to demonstrate this concept to you, that it is expandable and contractible based on the requirements. I am again pressing undo. So now I will show you how we can make the same thing. There is checks which is balanced. So now I am going to show you the same thing for net profit breakdown, how to make this. So if you see, the net profit is 334.9. So I'll just write VSTACK and then press tab and then go to EQPR and just see net income. Just click this and then hold the shift key down and then select until the last column, from until where the consolidation is happening, and just press open bracket and close bracket and close and enter. That's all. And now what you can do is just copy this and paste this as formulas. Okay, and what I will do further now is that I have to also get the values in the other years column. So I'll just paste it here, and let's see the check is working or not. The check is working, but it's linked to a different cell. Yeah, it should be this minus the net profit. That should be the right answer. Okay, and now what I can do is I'll copy this again and replicate it across cells, and if you see now, everything is fixed here. So you see here, we started from this is fine, again this is fine, and everything is a dynamic array. So this will help you in reconciliation, and trust me, it happens because when there are like 30, 40, 50 different entities, different departments getting consolidated into multi-architectural pattern, it's always very helpful to use this formula to determine where your issues are coming, because at the console level most of the times your checks will not match. Then that's how you will reconcile your functions. So this is what this function does. I think we are towards the end of the video, and that's all for 3D Excel formulas. In case you have any questions or any specific topic that you want me to cover, please feel free to drop it in the comments, and I will try my best to cover that specific topic. And if you have asked any question, then I will try my best to answer your question. I hope this session was helpful for you. Take care. Have a great day. Bye.